momentarily going to have Joel Shulman, entrepreneur, shares managing director. Joel, let's talk about this market because I love the post-Christmas sessions have been remarkable. We had the biggest one-day point gain in history. Then we had one of the best intraday reversals right as the market was on a cusp of collapse last Thursday. Dow off 600. All of a sudden, it rallied 900 points. We saw nice action on Monday, a surge into the close, 200 points in 4 minutes, and now we're seeing more. Are we getting some resolve, or what is this all about that we're starting to see here?
I think we'll see more volatility certainly through 2019. I mean, 2018 was not that unusual in terms of big gains and big losses. We had a lot packed in a very short period of time. But by contrast, 2017, which was unusually calm, 2018 felt a little choppy. But we'll probably see a little bit more this year. We're very bullish on small cap names, particularly non-U.S. small caps. We just launched a non-U.S. small cap ETF 2 days ago. So we're very bullish. We're putting our money where our mouth is.
Well, the Russell last week, we saw the IWM get more money than any other ETF. And then the Russell itself was the best performer on Monday. Small caps, January effect, is it seasonal, or is it just that they're oversold, or what?
I think they're oversold. I mean, we have growth. I mean, growth has decelerated, certainly. I mean, a lot of people have looked at the China deal that's not yet through, but people have looked at decelerated growth, but we're still having growth. And that's what I think investors need to recognize, is that we still have strong growth in the marketplace, and we think they're undervalued. We look at forward PEs. And I know you don't like PEs, but forward PEs, and they're 10 for non-U.S. small caps, and that's down from 45 a few years ago. So we think they're attractively priced.
I love the forward PE is one. I'm not big into those metrics, but that's my favorite. A PEG ratio also, depending on the company.
You're right.
But sometimes when a PE gets too low, Neemac and I were talking about this earlier. I forgot what stock we were saying. The PE got so low. Apple. Yeah. Like when a PE gets so low, sometimes it's low for a reason.
Yeah, you're right. I mean, and it depends on the movement, right? I mean, so you look at Sears, and when a stock's on a downward decline, I mean, certainly you'll see the PEs drop, but or in that case, they had no E, right? So no E. Right. But when you see companies on the fall, it's not necessarily a good metric, but we're looking for companies that are still growing strong or have growth and are undervalued. And so we search nationwide, worldwide for these types of companies.
Let's talk nationwide right now today. Right. Healthcare down 2%, real estate down 2.2%, utilities down 1.8%. On the upside, energy is taking off big time. Talk about OPEC and Russia cutting production. Consumer discretionary trending higher, consumer services trending higher. Leadership out there right now, can we get beyond what was leading this market, or do we still need those same names to step up if the overall market's going to go up?
I think a lot of money is going to move with the big stocks. I mean, you mentioned some of the, Apple and some of the other FANGs certainly drive a lot of the money. They move the market. They own high percentages of the major indices. So certainly when money flows in, it goes into those stocks first and foremost in the passive baskets. But I think, generally speaking, this is a good time to buy. It will be choppy. So investors probably ought to keep some of their dry powder for later in the year, where they can put investments on dips. And I think this first quarter, when earnings start to emerge, that maybe they're not as bad as people anticipated. I think we're going to see some investors do okay.
Well, it's definitely good that expectations are low. A worst case scenario has been being baked into this. The worst December since 1931. Yes. That means you're anticipating some really bad things, and if they don't come to fruition, that could be good. But you like emerging markets, right? You just talked about the small caps. International. Yeah. So when you wake up this morning and see this news in China, manufacturing contracting. I mean, does that worry or upset your sort of investment?
No, and I'll tell you why. I mean, we're going to see news pouring out. I mean, we know that China's been beat up. I mean, they're down 20+%, and many markets throughout the world are down 20 to 25%.
Yeah, but I'm talking the economy, though. Are you concerned that the economy, again, having to fuel emerging markets might not be up to be able to do that?
Well, again, we're looking at international in general. So we've got about 5 to 10% throughout the Asian markets, including China, Taiwan, and Hong Kong. So that is a percentage, and it's probably going to be the slower part of it. But we've got international stocks that are strong. We've got other companies throughout the world. Latin American stocks are going to do okay. So we believe, in fact, if you look just in the last month, Latin America has been up. So
it has been.
Yeah.
Thanks, Joel.
Thank you.
Happy New Year.
Happy New Year.